Hello, everyone. Welcome to our webinar. My name is Svetlana, and I am the moderator for today's webinar titled The African Agricultural Outlook. Before I introduce the speakers, there are some few housekeeping points I'd like to cover. At the bottom of the webinar screen, you should see a toolbar. Use this toolbar, please, to access a range of applications, such as speakers' biographies, if you would like to know about our guests more, additional resources, and technical support. All applications are resizable and movable to work with them easier and faster. Please submit your questions throughout the webinar via the Q&A session box, and we will try to get to as many as we can during our time. For the best viewing experience, we recommend to close any programs or browser sessions running in the background. This will help conserve your bandwidth. Yeah, thank you so much. Some network cause slides to advance slowly, then others, so logging off your VPN is recommended. We value your feedback very much, so please do complete the pop-up survey at the end of the webinar. We would like to know about what we do, what you think about it, what you are interested, what we should improve, or anything else you would like to share with us. So let's move to our speakers. I would like just to say a couple of words about Africa and why we are decided to hold this webinar. Actually, Africa is the second biggest continent in the world, but the share of Africa in the global agriculture does not exceed 5%. If we speak about common agriculture commodities like grains or oilseeds, but at the same time, Africa is the significant market player in coffee and cocoa market because it's the biggest producer and exporter. So today we will speak about the various aspects of supply, demand, trade financing. Of course, we will speak about COVID-19 pandemic and how it has already impacted the agriculture sector of Africa and which could be later. So without further ado, let me introduce the speakers. The first one is Mr. Worship Mugida. He is a market analyst from Refinitiv. He is responsible for market research and analysis of agricultural flows into the Middle East and Africa. He holds a PhD degree in environmental science from Rhodes University. And Worship will give us an overview on grains and oilseeds flows into Africa. The next, our honorable speaker is Jose Clavijo. He is an agriculture data scientist at Refinitiv, developing forecasts and analysis of world crop production. Originally from Venezuela, Pepe obtained his PhD in 2014 in agronomy from the University of Florida. During our webinar, Jose will cover crop production trends impacting Africa during the COVID pandemic. Our next speaker is Michel Arion, Executive Director of the International Cocoa Organization. Michel is the Executive Director of this organization based in Abidjan. A lawyer by training, he has been a EU civil servant for 30 years, serving as ambassador of the European Union in various African countries. And of course, taking account his position. He will cover impact of COVID, drivers, and challenges in the cocoa market. Our next honorable guest is Amanda Svanderberg, a senior relationship manager at Rand Merchant Bank, focusing on agriculture sector, global commodity traders, and renewable energy. A chartered accountant by profession, he has 5 years Africa experience as part of First Rand's Africa expansion strategy, including a 15-month secondment to Zambia, where he was a part of a forum to help develop the Zambian agriculture exchange. Impressive as for me. And also we have on board Mr. Wandile Sihloba, who is a chief economist of the Agricultural Business Chamber of South Africa. Mr. Sihloba holds a Master of Science degree in Agricultural Economics from Stellenbosch University. And we will discuss with Mr. Wandile about current and future implication of COVID-19 on the Southern African agriculture markets. So everyone is ready, and we can move on. So today we will start with production trends and import possibilities or necessities. So let's start with wheat production, and I would like to introduce to our discussion Jose Clavijo. Jose, could you be so kind to describe us, to tell us what about production? Do we see any changes in wheat production?
Yeah, thanks for the introduction, Svetlana. Especially in terms of disruptions related to COVID, we really haven't seen, or we've only seen a very limited impact on production and flows of wheat out of the major suppliers that provide wheat into Africa. So I'm just briefly going to talk a little bit about some of those large producing areas. So starting with the EU, the 2020-21 season began with problems for several major producers, such as Germany and the UK, where excessive rainfall helped see about 1 million hectares of year-on-year declines in areas sown to winter wheat. Additionally, spring dryness also really helped push yields down in many major producing areas of Western and Central Europe, including Germany, which along with Poland is one of the bloc's largest exporters to Africa. On a whole, as total wheat harvests continue, we're currently expecting the EU to produce between 137 and 138 million tons, which is about 13-14% down year on year, and below recent production averages out of the continent. So that's certainly something that has been on the radar. Now moving on to the Black Sea. There's been a bit more of a mixed scenario in the 2020-21 season. While the two largest countries in the bloc, Russia and Ukraine, saw fairly stable to increasing acreage of wheat, weather has not been particularly favorable for many of the most important producing regions, with most of Ukraine and southern Russia seeing persistent bouts of dryness and warmth this spring, which has certainly dinged wheat yields, especially in Ukraine, where we're expecting 6 to 8% lower yields year on year. In Russia, however, overall yields will likely be near to above last season's, which should push production to, again, surpass what we saw last season, which is quite favorable. So now overall, while we're expecting a crop out of Ukraine of around 26.5 million metric tons, and that's going to represent about a 3 million year-on-year drop. We expect the Russian crop to kind of more than compensate for the losses that we saw in Ukraine and in other Black Sea producing areas by producing nearly 5 million metric tons more than last season, especially if the spring wheat crop continues to see positive conditions through the rest of its season. as I mentioned initially, the COVID-19 pandemic has had really limited impacts on production and exports out of the EU and Black Sea. Overall, farmers' ability to secure inputs and manage fields has been essentially unaffected. And to date, most transportation networks in the EU and Black Sea have seen really little to no disruptions. Now, while most Black Sea countries at some point during the pandemic set wheat export quotas to secure internal supplies and maintain prices of things like bread, during the early phases of the pandemic, the limits that were set in countries such as Russia, Ukraine, but also in Romania, were largely within expected pre-pandemic export levels and have not really caused any significant impacts so far. Now, this is important because everything is pointing towards Africa as a continent probably producing less wheat in 2020-2021 season, especially due to declines coming from production areas in North Africa, seeing lower sown acreage and yields that were impacted by drought in places such as Morocco and Western Algeria. While production in Southern Africa will probably see year-on-year increases, and I'm sure Wandile will tell us a bit more about that later. These will not likely fully offset the losses that we're seeing in the north. So that's a bit of a picture of wheat, first of all. I'll hand it back to you, Svetlana.
Okay, thank you so much for this broad but in-depth picture. So let's move to the trends on imports to Africa countries. Worship, could you take the floor, please, and cover this question, please?
Thank you. So we have seen Egypt maintaining relatively strong wheat imports during the 2019-2020 marketing year. So the question that normally comes up is what is driving these imports? So Egypt's wheat imports are largely driven by population growth, which is outpacing local production. Each year, Egypt adds 2 million more people to the population. On the other hand, Egypt only produces about 8.5 million tons of wheat for about 100 million people, which is insufficient to feed the whole population. As a result, Egypt tends to have a huge dependence on wheat imports. So wheat imports are an integral part of the Egypt wheat market and account for more than 50% of the total wheat consumption of about 20 million tons. Egypt is among the countries with high wheat consumption per capita in the world. This is due to the fact that wheat is the main source of energy for many Egyptians. Both imported and local wheat is mainly used to produce bread under the Balad bread program, which is a heavily subsidized program to feed the poor majority of the Egyptian population. As a result, so much wheat is needed at any given point to supplement the local production, which is being outpaced by growing demand.
Thank you so much.
So
Very interesting. Oh, sorry. I would like just to add that today, in these hours, Egypt government agency is holding a tender to import wheat. That's very interesting. Worship, I have a question. So do you have any predictions on some kind of slowdown of wheat imports to Egypt due to COVID pandemic?
So we saw in the fourth quarter of the 2019-2020 marketing year, the Egyptian government coming out to say that they intend to boost their strategic wheat reserves. This was also just before the beginning of the local harvesting season. So notwithstanding relatively strong wheat reserves or stocks, Egypt maintained relatively strong wheat imports. At the same time, Egypt procured about 3.5 million tons of local wheat during the domestic buying season, a 9% increase from the same time frame last year. And so overall, our trade flow models are suggesting that Egypt imported about 12.65 million tons of wheat during the 2019-2020 marketing year. This is about 3% above the previous marketing year, and we expect Egypt's wheat imports to be sluggish in July. This is in line with past seasons, but it should pick up sometime in August, September, like you said. The biggest purchase of wheat in Egypt just issued out a tender to procure more wheat, so we expect more wheat to come, especially from the Black Sea region. If I might come back to the 2019-2020 marketing year, we saw the Black Sea countries maintaining their dominance on Egypt's wheat imports, accounting for almost 79% of Egypt's wheat imports. Like the previous speaker said, my friend Jose, we saw some Black Sea countries imposing some export restrictions. But in my opinion, these export limits were not stringent, or they were loose enough to allow normal trade in that is in line with past export volumes. So so we expect Egypt's wheat imports to start picking up in August going forward.
Okay, so it's actually good news for Black Sea region, I think. So could we move on other countries, please? What about Kenya, for example?
So our trade flow models are suggesting that Kenya imported about 2.25 million tons of wheat during the 2019-2020 marketing year, 11% increase from the previous marketing year, and 17% above the three-year average of 1.92 million tons. The Black Sea countries and EU countries, together with Argentina, were responsible for about 99% of Kenya's wheat imports during the 2019-2020 season. We have actually seen Kenya's wheat imports almost doubling over the past decade to meet local demand that is unmet by local production. Whereas wheat consumption is increased in Kenya, largely driven by growing preference for wheat products and population growth over the past 10 years, we have seen Kenya's wheat production remain relatively flat, if not declining. So we expect Kenya's wheat imports to remain relatively strong going forward, mainly due to local demand outpacing wheat production. Even though we recently witnessed parts of Kenya being infested by locusts, which was termed by FAO as worst outbreak in more than 70 years, there are some suggestions that some areas that produced the large portion of Kenya's wheat imports were not really affected. Nonetheless, we still expect Kenya's wheat production to remain relatively weak, and therefore we expect Kenya to keep on importing more wheat, especially from the Black Sea region. Why the Black Sea region? Because Kenya's wheat market is price sensitive. On the other hand, Black Sea wheat tend to be price competitive. So we expect Black Sea countries to maintain their dominance on the Kenya wheat import market.
Thank you so much. Let's move to to the other regions. What about South Africa?
So with South Africa, we saw their monthly wheat imports declining in June 2020. But I must mention that their year-to-date wheat imports remained relatively strong, with the EU countries accounting for about 78% of these wheat imports. Our trade flow models are suggesting that South Africa's monthly wheat imports could pick up in July 2020 due to, as we are predicting, some shipments coming out of the Americas. That's America and Canada, and possibly Australia as well. So we expect South Africa to maintain relatively strong wheat imports in the fourth quarter of the current marketing year. Just to give some perspective, I'm sure Wandile will touch on this. It is estimated that South Africa produced about 1.5 million tons of wheat during the 2019-2020 season, and that is insufficient to feed the population of South Africa, which is nearly 60 million people. So against that background, we expect South Africa to maintain relatively strong wheat imports to meet the local annual total consumption of about 3.4 million tons. So we are expecting more. It's not necessarily because there's a strong growth in wheat consumption in South Africa, but it's if you look at the trends, there's been the area under wheat production in South Africa is either sort of like declined or stagnated. At the same time, wheat consumption just increased marginally, but the gap has always remained there. So we expect wheat imports to remain relatively strong in the fourth quarter of the 2019-2020 marketing year to fill up the gap that is unmet by local production.
Okay, very well. So we provide our audience with an overview on wheat production and wheat imports. And as I can understand from your guys' presentations, from your view, Black Sea region would have a good year again in respect of demand. Let's hope for this. So let's move to corn production, and I would like to bring in Jose back again. What can you see for corn production and on possible disruption in production due to COVID-19?
Yeah, sure. Thanks. I think as with wheat, the biggest impacts or market movement events to corn production and exports have not really come from COVID-19. First of all, let's talk a little bit about South America, which is one of the largest suppliers to Africa and where the 2019-20 crop harvests are nearly done. First of all, talking about Argentina, that crop started out with a lot of promise with acreage increases and really good early season conditions. However, late season dryness and warmth impacted crops at critical reproductive stages around February, March, which led to year-on-year yield reductions in the 3 to 4% range. However, because of those acreage increases that we saw, this still placed the crop as the second largest in the country's history at around 48 to 50 million metric tons, and which combined with fairly favorable harvest weather led to seasonal export records of Argentinian corn in the first half of the year. And now in Brazil, corn production is broken up into a first crop that is sown mostly in August to October, and a second crop that is sown after soybean harvest in January, March. Combining those two, we are expected to see a total crop of around 100 million metric tons, which is very close to last season's record totals. Now, again, the second crop, which accounts for about 3/4 of the total and basically all of the country's exports, we saw increases in the area and overall quite healthy yields, despite some dryness issues in portions of the south, as well as some harvest delays. So now we've talked about Argentina, Brazil. Even though I don't have it on the graph here, some of the other important supply areas of corn to Africa are the EU and the Black Sea as well. And those saw more mixed conditions, despite slight increases in corn acreage in places like Romania. Spring dryness in that area meant lower yield expectations and production that will probably drop over 2 million metric tons from last season to about 14.8 million tons. In Ukraine, where we already just talked about a bit, the corn crop will almost surely be bigger than last season by about 2 million metric tons, reaching close to 38 million metric tons after really significant increases in area. And yields that are not bad, won't be breaking records, but that have largely avoided some of the dryness issues that we talked about in relation to winter crops. Now, moving from the EU, South America, all eyes are now really on the US 2020-21 crop. After last season's dramatic decrease in sown area due to the record wet spring, an increased acreage and a return to average to above average yields, will likely see a really, really big, healthy crop coming out of the US in the 2020-21 season, which will get harvested around October. While that crop still, in a way, disappointed the market that was expecting much more acreage, our forecast is still looking at a crop that could be near 390 million metric tons. And now, overall, talking about COVID-related disruptions, just like with wheat, in all of these places, the impacts have been fairly minimal in terms of impacts to production or production-related activities or transportation or exports. As I mentioned before, those countries, have really not seen really sustained or long-term issues because of it. There have been some port closures and transportation delays due to COVID in places such as Brazil, in the port of Santos, or in Argentina's Rosario, due to closures of ports and limits around transportation, really at the height of the early stages of the pandemic. And, while they did cause impacts and some delays, they tended to be very localized and short-lived disruptions overall. So this, all of this, looking at the big picture, once we see the overall very healthy supply, relatively few impacts, and on top of that, the likely expected record corn production overall coming out of Africa for the 2019-2020 season, means that there are fairly limited supply concerns in terms of corn into Africa.
Okay, very clear picture on corn production trends, and that there is no significant disruptions due to COVID pandemic. And actually, this is very great news, because a lot of people were seriously worried about possible cuts in production and especially therefore in demand. Okay, let's move to import trends. I know that Egypt is one of the biggest corn importers in the world, and I would like to invite Worship and cover this question. Actually, as we can see from the charts on the slide, corn imports to Egypt during the first 8 months of the current marketing year remained strong, very strong. And what are the drivers for that? Worship, your place, please.
So the agriculture and poultry industries in Egypt are supporting growth of corn imports. So, as you might know, corn is one of the main ingredients in animal feed production. So, just to give some perspective of what's happening with these two industries, Within the aquaculture production in Egypt, almost doubling over the past decade to about 1.6 million tons in 2019. Similarly, the pork production in Egypt expanded at a rapid rate of about 5% per annum over the past 10 years. So there has been growing demand for animal feed. Whilst the aquaculture and pork industries expanded rapidly over the past decade, the local corn production has remained relatively flat over the same time frame. So imports are required to supplement the demand unmet by local production. So during the first 3 quarters of the current marketing year, we saw Ukraine, Romania, Argentina, Brazil maintaining dominance on the Egyptian corn imports. So these 4 countries had a combined market share of about 99% of Egypt's corn imports during the first 3 quarters of the current marketing year. Our trade flow models are suggesting that we could actually see Egypt's corn imports surging in July. Thus, they are predicting that Egypt could import about 1.3 million tons of corn from Brazil and Argentina. Actually, Argentina is forecasted to be responsible for about 61% of these imports, with Brazil responsible for the balance. So Egypt is expected to maintain relatively strong wheat imports during the 4th quarter of the current marketing year. Additionally, our trade flow models are suggesting that about 150,000 tons of Argentinian corn and almost 250,000 of Brazilian corn will reach Egyptian shores during the first 2 weeks of August. Yeah, so those 2 industries are really driving Egypt's corn imports.
Okay, thank you so much. And if we spoke about grains, we can't avoid speaking about oilseeds and soybeans. Pepe, could you give us an overview about soybean production trends in many production areas important for Africa?
Sure thing. Again, I think the biggest story this season has been around the 2019-20 crops coming from South America. As with corn, Argentina's soybean season started off with a lot of promise, with higher year-on-year acreage and really good early weather. However, that same dryness that I spoke about before when talking about corn really impacted the crop, and it actually impacted a lot more than it impacted corn production, which actually led to yields dipping over 8% year on year and keeping production just under 50 million metric tons or near. This was, an additional problem for producers that were already quite rattled by increased taxes on agricultural exports that have been levied by the new government that took power in October of last year. And again, on the other hand, we have Brazil, which just continues to impress. This was another record year of sowings that set expectations early on very high. And while we had some important weather-related issues in places like Rio Grande do Sul, which is one of the largest producing states, where drought crippled yields of soy and also first crop corn, the country is almost surely, as harvests approach about 70%, 60 to 70%, the country's on track to produce about 123 million metric tons this season, which again would be a new record. So not only is production continuing to set new highs, but the devaluation of the real, the improvements in the transportation infrastructure, and just the never-ending trade war between the US and China just continues to be a boon for Brazilian ag exports. COVID has had a bit more of impact up until now on the soybean supply chain in South America. As I mentioned earlier, there were some localized and short-term closures and transportation disruptions that also impact, just like with corn, the flow of the soy complex products, particularly though for soy meal and soy oil, since on top of those kind of minor port closures and transportation glitches, especially in Argentina that we saw, we're seeing closures of processing plants, which again will really affect countries like Paraguay and Argentina that of the soy complex export a lot more of it in the form of soy meal and soy oil than soybeans themselves, which is the main thing that Brazil exports. In addition to these smaller glitches and concerns there, we've also seen the Paraná River, which is the main pathway through which soy complex products and corn leave Argentina and Paraguay. Paraguay mostly soybean. The river has gotten to very nearly historic lows in many key areas along the route, which has really slowed down and increased the cost of the flows of ag commodities, again, leaving Paraguay and Argentina. Again, in a lot of ways, it's also which, as we said before, is just continuing to really benefit from all of these different impacts. I can't talk about soybeans without mentioning the ongoing 21 crop. While the markets were slightly disappointed around June with slightly less expected area sown this season, and despite there being some weather scale soy belt, recent and expected weather through the rest of the season are overall looking very positive and will likely point to a big rebound in yields, which should lead to a crop that will be anywhere in the 112 to 115 million metric ton range, which again should reduce any supply concerns into the fall. So overall, not too many things to be worried about in terms of soybean supply.
Okay, thank you so much. And Worship, what about soybean imports to Egypt, for example? Could you give us a little overview on this, please?
So we have seen Egypt maintaining relatively strong year-to-date soybean imports. They actually reached a historic high of about 3.44 million tons in July 2020. Our trade flow models are suggesting that Egypt would keep relatively strong soybean imports in the fourth quarter of the current marketing year. This is so because we're expecting Egypt to import about 470,000 tons of soybeans, mostly from the United States, in August, and more imports are expected into September, the final month of the current marketing year. So the United States has had a market share of about 87% of Egypt's wheat imports, soybean imports during the first 3 quarters of the current marketing year. We expect the United States to maintain its dominance into the final quarter of the 2019-2020 marketing year. So Argentina and Brazil and Ukraine as well are expected to be responsible for the balance. So just to put things into perspective, the United States have kept a market share of more than 84% on Egyptian soybean import market for the past 2 marketing years, largely due to price competitiveness and perceived good quality of the soybean crop from the US. So we expect the trend to continue in the near future due to growing demand for soybean meal and soybean oil from the local industries in Egypt. So during the first 3 quarters of the 2019-2020 marketing year, Egypt was the 4th largest importer of US soybeans after China, the EU, and Mexico, with a market share of almost 9%. So Egypt is becoming a lucrative market for the US soybean industry. So we expect Egypt to maintain. Overall, our trade flow models are suggesting that Egypt's soybean imports for the 2019-2020 marketing year could exceed 4.2 million tons. And this is a huge increase, taking into account that a few years ago, Egypt wasn't even importing those huge amounts of soybeans. But due to the growing demand for soybean meal from the animal industries, and also the growing food processing industry that is using or consuming soybean oil, we have seen Egypt increasing its crushing capacity over the past few years. As a result, we have seen huge amounts of soybean exports into Egypt. At the same time, this growth in soybean exports is suppressing growth in Egypt's soya meal imports, because the local industries now can easily purchase local soya meal from the crushing industry.
Okay, thank you so much for this information. Actually, I would like to remind our viewers, the participants of our webinar, that they could ask us their questions, and we will be ready to answer them. So I encourage you to be more active if you have any interest areas to cover from us. So let's move to the next part of our webinar. And as we cover the situation with grain and oilseeds production and imports, let's have a look at cocoa. I think that not many people know much about this area, and I would like to invite to our discussion Mr. Michel. Michel, could you start with your overview on cocoa production drivers and challenges for the industry, please?
Yes, certainly. Good afternoon. Well, I would like to start by saying that actually the entire cocoa supply chain has been impacted by the COVID pandemic, but in a very different way and at different time, looking at the various stage of the value chain. I would say we were relatively lucky at the beginning of the pandemic. We were in March in Europe and in the United States, the 2 biggest markets of consumption. And well, in March, April, we were at the end of the main crop. So the main crop had already been delivered, had already reached the countries of destination. The main crop starts in October and finishes in March. But looking at the value chain, to summarize the value chain, so you have the production, the harvest, if you wish, in countries of production, mainly in Africa. 80% of the world production takes place in Africa. The next step, the traditional next step, was shipment in countries of origin. Then grindings meaning processing, transforming the beans into semi-finished products, the cocoa liquor or cocoa paste, cocoa butter, cocoa powder. But we have seen in the last 10 years as well, sometimes grindings taking place before shipment. So we have seen the grindings, no, the production country, the producing countries investing a lot, or the big companies investing in producing countries, in cocoa in countries of origin. Grindings, you have the manufacturing, the transformation of the cocoa ingredients into chocolate products or cocoa-based products, then distribution, and then consumption. So as I said, in March, April, the two biggest consumption markets were the most impacted. So the biggest impact was on consumption and on distribution, on the retail. The retail business was very much impacted. Of course, we, like everyone, we expect a contraction of the economy in the now and in the second part of the year. This contraction may be assessed at a level of -3 to -5%. So we do anticipate, and this contraction, of course, will reduce the disposable income for the consumers, and the main driver of consumption is the income. So we expect a reduction, a continuing reduction of consumption in the last quarter of 2020. But there is now a new element that has come, a new information that has come to light about 3 weeks ago, the level of grindings. So we have seen actually the figures related to grindings decreasing sharply. We have seen a reduction of industrial activity in the EU of about 9%, even -16% in Germany. We have seen a reduction of 11% in the US, a reduction of more than 2% in Asia. The situation in Africa is still unclear, but we may have seen a certain increase in Côte d'Ivoire, but a decrease in Ghana. But I would like now to go through a few slides illustrating what I just said. So the slides you are seeing here. So you see at the bottom, the orange curve is the curve of the consolidated commodity index. The blue curve is the Standard & Poor's equity curve. The brown one is the cocoa curve, and the flat one is the US dollar index. So you see arrow number 1 on my slide, you see that, of course, cocoa went down, but it was more resilient than actually the global commodities and the equity markets. So the fall was to a certain extent less than one might have expected, and that is due to some reasons that I will explain later. But if you look now at arrow number 2, the red arrow, you see that since June, the cocoa prices that have been relatively resistant actually are decreasing again, while at the same time the other commodities and the equity market is recovering. Why in June? Well, because precisely the figures of grindings have been made public, and the markets have realized the impact of COVID on the demand. So if we look at the next slide, so this is a slide illustrating the evolution of the prices on the futures market in New York, and it's a bit technical, but it shows you that actually the market was in backwardation. Backwardation means that actually the buy contracts are more expensive than the contracts at a later expiry date. Actually, the market are expecting and have been expecting a decrease in the prices since actually the end of last year. So that the effect of being less effective on cocoa than on other commodities, because the market was already expecting lower prices in the future. And the next slide actually is also illustrating the same issue. This is the price of the first and second position in New York. And with the level of stocks of tenderable cocoa, you see the level of stocks below extremely, extremely low, just because, well, people are not going to make stocks and to keep stocks of products where they expect low prices in the future. The next slide is the previous one. Yes, this is our forecast with regard to world production and world grindings. So in blue, the production, you see that the production will slightly decrease from by perhaps 1 or 1.5%, but the grindings will more than proportionally decrease by a minimum of 4%. And that is really bad news, because the level of grindings actually is the proxy indicator of the demand for cocoa in the chocolate industry. Well, a decrease of the grindings actually is just an evidence of what the markets are expecting in the medium term. And I would say that even in the longer term, if we look at our next slide, which is our forecast for the next 5 years, you see in brown the production growing. We have used an annual growth rate of 1.7%. So we will, in the next 5 years, grow from 4.6 million tons to 5.2, almost 0.2. And the grindings will also be growing, but less than proportionally, with an annual growth rate of probably 1.1%. So the blue column shows you an increase of the grindings, but the grindings will increase slower than the production. As a consequence, the green line illustrating the trend of the prices, unfortunately, we have already very low price, about $2,200. We will go below 2,000. This is still, of course, very hypothetical, but we see in the future, in the long term, a decrease in the prices and the price of the beans, and of course it has an impact on the farmers. So, as a conclusion, I would like to propose 3 or 4 conclusions. First of all, we have seen the impact of the COVID actually moving upwards, moving up the value chain from the retail to the grindings and to the production. COVID has disrupted the supply chain, but has and will have economic consequences on the processors and the processors of cocoa, semi-finished product, and manufacturers of chocolate product, and will probably lead to a reduction of the demand for chocolate confectionery product. So if indeed we have this growing production with decreasing grindings, well, we will again have a surplus at the end of this year, surpluses in the coming years, and the producing countries and the cocoa depending economies will have to pay a very high toll because of the decrease in the world prices. So we need, and that is really the top objective of our organization, among the 51 members of the organization, we really need to work together to actually make sure that the farmers receive a better living income and that the farm gate prices are maintained at the actual level, if certainly increased. So that is the end of my presentation. Thank you very much.
Thank you very much. And I have some questions about your industry. Actually, the current business model for cocoa is smallholders, yeah? And how do you think, is this system sustainable?
Well, indeed, you are. The business model today is based on smallholders. Very roughly, the 5 million tons of beans are produced by 5 million farmers on 5 million hectares. So, in average, a farmer is working on a land of 1 hectare, producing 1 ton. I mentioned the price of $2,000 for the beans. Actually, the farmer gets 60 or 70% of that. So how can you survive with $600 a year? So this business model is actually based on extremely poor farmers. And in the longer term, I think we have to reflect on changing the business model, on increasing the efficiency and the productivity, avoiding surpluses, and reducing the number of farmers. So it's absolutely not viable and not sustainable to continue like that.
Thank you so much for explanation. Michelle, I'm so sorry. We have to switch to Wandile because he has to go to the next appointment, but I promise I will get back to you with my questions a little later. So I would like to introduce to our discussion Mr. Wandile Sihlobo, the economist, and I would like to discuss some questions. And the first question is actually very broad, but very important to understand the situation here in Africa. How has the impact of COVID-19 been on the agriculture sector or in Southern Africa? And are there any commodities that are hate relative to others?
Yeah, thanks for that, Svetlana. I will try to bring all of those together. And I think that my response or my contribution to the discussion really builds on for what Worship as well as Jose have already spoken to. Because I think broadly, how we need to look at it when we look at the impact of COVID-19 on agriculture in Africa, we have to perhaps maybe appreciate that there were already about 2 waves of crises that were affecting this region. The first one obviously being the one that has been alluded to earlier by Jose on the locusts on the East Africa side. And I think on the Southern Africa, the most impactful one has always been the drought story. This is the effects in the 2019-20 production seasons. And I think the Southern Africa one was more meaningful or impactful if one looks at all of the other countries with the exception of South Africa and Zambia, which right now are sitting with their second biggest grains harvest on record. But all of the other countries, I would say they are roughly balanced. And obviously Zimbabwe having a major shortfall, say for maize, for example, a shortfall of about 1 million tons. That's going to fall in for the 2020-21 marketing year. And I think there's the same story for Kenya in the East Africa region, where the maize shortfall is about 1.3 million tons. That's for the 2020-21 marketing season. As the COVID-19 strikes on its own, I would say there hasn't been really a major impact aside aside from the logistics side. And I think the most impactful thing has really been those two factors that I have alluded to. But obviously, when one looks through this curve, there are two major things that I think we can be cognizant on broadly. And the first one being the story of demand. And I think in the questions, it came earlier on. Because if one looks at the numbers that are coming up, say, for example, from the World Bank and also the IMF, on a per capita income across all of these countries, I do think that the demand, need is going to be there, but the demand might not be as solid because the incomes there's going to be a notable decline, and there isn't even much of a capacity for the state to step in these some of the countries, because you've seen the fiscus being diverted to the health side. And I think that the other second point I want to bring on is obviously that right now in 2 months' time, particularly in Southern Africa, we will be heading on for the planting season of 2020-21 production year. And I think in all of the countries that are having a larger share of a smallholder farming side, if the pandemic hasn't really slowed notably, you could see a disruption when it comes to the planting side, depending about how that spread is happening. So I think those are some of the things that perhaps maybe we could keep in mind. But broadly, the key importing countries that I think will be important for people to look at in those major grains that have been talked about, I think it's Kenya and Zimbabwe, broadly southern as well as the East Africa. Both of the countries just north of 1 million tons of maize for this new marketing year. And in as far as wheat, I think that the key big importers will obviously be remaining South Africa, Kenya, Nigeria, and Sudan. In the sub-Saharan Africa, those are the countries. And I think the total import demand for those countries would be roughly around about 12 million tons of wheat. That's roughly flat when you compare to the previous marketing year. So I think that's about that people will be watching in those areas. In as far as corn, obviously, aside from Zimbabwe, which has recently been open on a genetically modified crops, in other countries like Kenya, you will still see those limitations because policy on GMOs haven't really changed in there. While in Zimbabwe, we all know that has been recently lifted, and so the flow of goods could be good, provided that there is capital, obviously, for all of the products that will be needed. So I think briefly, that's how I'm looking at and I'm seeing the picture of this impact of the pandemic so far. Not really much except on the logistical side, and certainly for South Africa in the ports, yes, we've seen a number of those logistical difficulties in the Cape Town ports and elsewhere, but I think that's all still manageable for now. Let me stop there with these remarks. Thanks.
Okay, thank you so much for your short, very brief but broad overview on the situation in Southern Africa. I understand that you have to go, so we can't take you here any longer. So thank you so much for attending our webinar and sharing your view on the situation in the Southern Africa. Having a good day. Okay, thank you. So let's move to our next speaker. I would like to invite to our discussion Mr. Amandus. And what changes do we see in the situation of trade financing? And I would like to see and to hear some more insights and more interesting facts about this area. Amanda, the floor is yours, please.
Thank you very much, Svetlana and the other guests. I guess I'll try and be as brief as possible. So I've highlighted some of the specific areas where we do see an impact as a result of COVID-19, and obviously the breakdown of supply chains would probably be the most visible and widely experienced area by the general public, as this translates obviously in terms of the products that are available at your retail outlets. But over and above that, obviously from in terms of the sort of the import and export, to the extent that you do have lockdown of ports, that does impact the ability to import and export. And it's not just a question of your own export port being closed, but also the destination port. And I think that's quite important, because at the end of the day, if you've got goods that needs to be exported and those goods cannot reach its destination, then your goods are going to get stuck at the port. I think another point that we have seen, and where we have some of our clients also experiencing some challenges, are where you do have sort of these continuous interruptions, which are caused by sort of temporary shutdowns of ports, and those being due to sort of positive cases that are reported at the ports, and each time that the port sort of shuts down, that's time that is lost, and where goods cannot pass through the port in order to reach its destination. So I think that sort of, from a supply chain perspective, that's sort of a very brief overview of the impact of COVID. And obviously that's probably the most, especially at the start of the pandemic, that was the most of the impact. And then I think sort of anecdotally, our expectation in terms of the volumes in the region, from a trade perspective, we expect it to be down about 50 to 75% due to these breakdowns. So I think that's quite a significant drop in terms of import-export volumes. And I think what is also sort of linked to that, and what is important to consider, is the fact that Africa obviously is a sort of mostly commodity-led economies, and we export raw materials. But at the same time, we import refined product or beneficiated product, and that obviously creates, I think, sort of almost a double whammy in terms of the impact of COVID, and to the extent that there are trade volumes that decrease. Then I think just moving on to liquidity. So obviously, I think sort of at a macro level, the first important point to remember is that many of the jurisdictions in Africa, Southern Africa, have already been under sort of liquidity constraint prior to COVID. So I think it speaks to sort of transferability and convertibility of dollars, and access to dollars in these economies. So with the COVID-19 and the flight to safety, obviously there was a massive impact on exchange rates, and that obviously amplifies the impact of COVID-19. That also then, I guess, to an extent, explains some of the responses that we have seen, for instance, from the Nigerian central bank, where they have halted access to FX for maize imports. I think then, if we sort of, and then I think on a micro level, obviously there's some liquidity constraints, and I think that's quite important, sort of within the local economies. Companies are experiencing liquidity constraints, and that's due to sort of stress on the cash conversion cycles, and causing inability, to collect debtors, as well as or having to extend debtor payments to accommodate sort of your customers. So there's a lot of negotiation around these, and these obviously, because it's a part of a ecosystem, it has a snowball effect, and it has a tendency to sort of, I think, create timing mismatches and differences which are difficult and challenging to manage. I think anecdotally also, I think one of the challenges that we have noted is, where we have goods that are at the port, it can't reach its destination because of the destination port being under lockdown. You've got foreign exchange risk instruments, FECs, or whatever the case might be. You've entered into these contracts, and you've got trade instruments as payment. And then you have to roll these trade instruments as well as the FX hedges, and that then is done at weaker exchange rates, and that causes further liquidity constraints on the companies. I think then, just to sort of summarize that then onto the trade finance and the impact on trade finance. So obviously the dollar liquidity, supply chain breakdowns, And then I think an important one being the increased cost of logistics. Obviously, it's more expensive to transport goods, and also as a result of the sort of the health risk factors as well as some of the other factors. So what we have seen is then that our trade instruments are obviously going to increase. It's going to be the cost of trade instruments are going to increase. It's going to be more expensive due to these higher risk factors, and due to the risk factors, there's also then a tightening of trade finance in the region, and that's obviously because there's strain on liquidity in the markets, and there's strain on the companies and the ability to continue sort of earning and operating profitably. I think that's sort of from my side, Svetlana. I think that's sort of a quick overview of the impact that we have seen.
Yeah, thank you so much. I have one question from me. Could you share your thoughts on the recent halt imposed by the Guinean Central Bank on access to FX for maize importers? Very.
Yeah, so I think that, sorry, Svetlana? So I think, first of all, obviously there's quite valid reasons for the Central Bank of Nigeria instituting these halts on FX, and these being sort of the promotion of economic recovery and increase of local maize production and livelihoods and jobs and etc. The impact is going to be in the short term, and I think what we expect is that sort of Nigeria will have to continue importing maize for the short term, obviously because they cannot produce sufficient maize at the moment, and it's not as easy as just putting a seed in the ground. It takes time for maize to grow, for corn to grow, and then as a result of the imports, because the importers can't access the market for FX, the formal FX market or NAFX in Nigeria, that means that they will have to access FX in the parallel market, which are at weaker rates, and the consequence of that, or our expectation, is that there would then be a knock-on effect on inflation. And then I think a big question is then whether it's likely to actually make a difference to the FX demand. I mean, maize in Nigeria imports around, let's say, roughly 5% of their local demand is imported, so it's a small proportion. It's about $60 to $64 million per annum that is imported in value, and I mean that compares, just to put it into perspective, it compares to $64 million per day that is required in terms of FX. So $46 million per day versus sort of $60 million per annum for maize imports. So I guess it's yet to be seen. I think it also then raises a good question around, and one that we probably don't have time to answer, but so import substitution and the need for local production versus the ability to import, and what that then implies in terms of the efficiencies that are available in the local market in terms of the agricultural and production efficiencies, as well as then the dependency of the country on imports and so forth. So I think there's a bit of a debate to be held against, a bit of a debate to be held on whether is it better to produce inefficiently or to import, and then I think what would be quite interesting study would be to compare sort of the import of your inputs, being fertilizers and seeds and etc., and what that implies for the economy versus importing the raw material when you know that you're going to be producing at sort of a third of sort of a standard yield expectation.
Thank you so much. Understood. That's quite clear. And actually, thank you so much for your view and for you joining us. Actually, I promised to Mr. Michel to get back to him with my question. So I have the latest question for Mr. Michel. And my question is about how to better match supply and demand for cocoa, and try to avoid surpluses on the market, and actually to promote better prices for producers.
Well, it's indeed the $1 billion question. I mentioned already that the market was in surplus, so I think we should work on both supply and demand. Working on supply, I think what we need is certainly a better supply management. As long as the producing countries will produce more and more cocoa, if the demand and the consumption do not increase, we will have surpluses. And surpluses is the worst thing for agricultural markets because prices are going down, or for the farmers at least. So we need to have some kind of supply management in place where producing countries do monitor better the product that they put on markets. The second, and then the whole discussion on the necessity to manage better the stocks and things like that, and quotas among countries. And I mean, there are various responses, all very difficult, sometimes also very expensive. So it's a question also of arbitrage between the consumer, the taxpayer, and the farmer, of course. But we need such a reflection. We need as well a discussion on the demand, on the consumption. The European and the North American markets are saturated. A US or European consumer is already eating something like 5, 6, 7 kilos of chocolate a year. But the Chinese do eat 70 grams, the Indians 200 grams. So there are huge opportunities in developing consumption in emerging markets. In Africa, to a lesser extent, the only country today with the demography is certainly Nigeria. Then you have a problem of income. So promoting consumption is important. New markets are there, but we don't see the Chinese market developing at all, or not much, at least, not as much as other products of consumption. I think there are also other ways and tools to develop consumption, also the development of other products, including the non-food market. As you know, the cosmetics market could offer opportunities for growing demand in cocoa. Thank you.
Okay, thank you so much. Actually, I personally ready to eat more chocolate. So you can rely on me in this question. So that's actually that's all from our side. We've covered all the questions, all the problems we raised in the beginning of our webinar. Actually, I'd like to check if we have any additional questions. No. As I understand, all the questions which have been submitted to the Q&A box were answered, and I hope all the people who raised their question were satisfied with the answers. Anyway, if you have any questions after, don't hesitate to find ourselves, for example, in social media or write down to our website, and we will be ready to answer your questions later. So I would like to thank all the participants for this webinar. It was a very interesting and very lively discussion. I was glad to be a part of it. And I would like again to remind, to ask all our viewers just to do complete the pop-up survey at the end of the webinar. We appreciate any your views, any your ideas, and we would like you enjoy our events. Thank you so much again. Have a nice day, and see you maybe on any other webinar later. Good luck.
Thanks, Svetlana.
Thank you.
Thank you.